Welcome back to Drowsy Tales Daily. Tonight, the people you trusted with your most sensitive financial information became identity thieves. Tax preparers who stole $3.2 million in refunds. Accountants who filed fake returns using your name. And financial advisors who turned tax season into their personal crime spree. These are the tax preparation frauds that will make you guard your social security number like gold. Our first story takes us to Memphis, where tax preparer Gladys had been helping clients file returns and maximize deductions at her storefront office for 6 years. She was praised by customers for her knowledge of tax law and ability to find legitimate deductions that saved them money. Gladys seemed genuinely committed to helping working families keep more of their hard-earned income. Gladys found deductions I never knew existed and got me the biggest refund I've ever received, shared satisfied client Roderick during tax season. Her expertise in tax law helped me save hundreds of dollars while ensuring everything was filed correctly and legally. But clients started receiving notices from the IRS about discrepancies in their returns, with Gladys claiming computer errors and filing delays that would be resolved through amended returns and appeals processes. The IRS says my return has false information and I owe thousands in penalties, explained panicked client Rosalind to Consumer Protection Services. But Gladys says the IRS computer system has errors that create false notices requiring professional resolution and appeal documentation. When Rosalind hired an independent tax professional who found that Gladys had fabricated deductions and income information, Gladys claimed alternative preparers lacked expertise in aggressive tax strategies and legitimate deduction maximization that required specialized knowledge of current tax regulations. Investigation revealed Gladys had been deliberately filing fraudulent returns while collecting preparation fees from clients who trusted her expertise, then keeping refund money that was deposited into accounts she controlled rather than client accounts. She'd been creating fake W-2 forms, fabricating business expenses, and claiming non-existent dependents to inflate refunds, then intercepting the money through bank accounts that clients didn't know existed. The scheme particularly harmed working families who trusted professional tax expertise but faced IRS penalties and criminal investigation through fraudulent returns filed in their names without their knowledge. When IRS investigators examined her client files, they found evidence Gladys had filed over 200 fraudulent returns while collecting preparation fees and stealing refunds exceeding $800,000 from clients who believed they were receiving legitimate tax services. Our second story brings us to Orlando, where certified public accountant Clement had been providing tax preparation and financial planning services for small business owners throughout Central Florida for 8 years. He was licensed by state accounting boards and recommended by business organizations for his expertise in small business tax law and financial management. Clement seemed genuinely knowledgeable about business taxation and committed to helping entrepreneurs navigate complex tax requirements. Clement handles all our business taxes and saved us thousands through legitimate business deductions, shared grateful business owner Penelope during an accounting firm testimonial. His expertise in small business taxation provides peace of mind and significant savings through professional tax planning and compliance management. But business clients started receiving audit notices and tax bills from the IRS, with Clement claiming increased audit rates and changing tax regulations that created compliance challenges requiring ongoing professional representation and appeal processes. The IRS is auditing our business and claiming we owe $50,000 in back taxes, explained devastated business owner Horatio to accounting oversight authorities. But Clement says tax law changes created compliance issues that require professional audit defense and negotiation with IRS representatives. When Horatio hired independent tax attorneys who found that Clement had been filing false business returns and claiming non-existent deductions, Clement claimed alternative accountants lacked specialized training in aggressive business tax strategies and audit defense that required specific expertise in small business tax optimization. Investigation revealed Clement had been deliberately filing fraudulent business returns while collecting accounting fees and embezzling business funds through fake tax payments and fabricated business expenses that were deposited into accounts he controlled. He'd been creating false business deductions, fabricating equipment purchases, and claiming non-existent business expenses to reduce client tax liability while stealing the money that should have been paid to the IRS. The scheme particularly harmed small business owners who trusted licensed accounting expertise but faced business destruction and criminal liability through fraudulent tax filings that created IRS investigation and potential prosecution. When state accounting boards investigated his client practices, they found evidence Clement had filed over 100 fraudulent business returns while embezzling funds and collecting fees exceeding $1.2 million from businesses that received deliberately false tax services. Our third story takes us to Kansas City, where tax preparation franchise manager Beatrice had been overseeing a chain of seasonal tax offices throughout the metropolitan area for 5 years. She was trained by national tax preparation companies and praised by corporate management for her customer service skills and ability to maximize office productivity during tax season. Beatrice seemed genuinely committed to efficient tax processing and customer satisfaction. Beatrice's office always handles my taxes quickly and professionally with excellent customer service, shared regular client Lysander during a customer satisfaction survey. Her efficient processing and friendly staff make tax filing convenient while ensuring accurate preparation and timely submission to the IRS. But clients started discovering their personal information was being used for unauthorized purposes, with Beatrice claiming data security breaches and identity theft from external sources that required credit monitoring and identity protection services. Someone filed a tax return using my social security number before I could file my real return, explained victimized client Cordelia to Identity Theft Services. But Beatrice says identity thieves are stealing tax information from various sources and recommends professional identity protection services to prevent future fraud. When Cordelia provided evidence that her personal information had been accessed from Beatrice's office computers, Beatrice claimed tax preparation offices faced constant cyber attacks and security threats that made personal information vulnerable despite professional security measures and data protection protocols. Investigation revealed Beatrice had been deliberately selling client personal information while collecting preparation fees from customers who trusted her office security, then providing detailed identity packages to criminal networks that used the information for tax fraud and identity theft schemes. She'd been collecting social security numbers, birth dates, addresses, and financial information from tax returns, then selling complete identity packages to fraud rings that filed false returns and opened fraudulent accounts using client identities. The scheme particularly harmed working families who trusted professional tax preparation but faced identity theft and financial devastation through deliberate information trafficking that enabled widespread fraud using their personal details. When federal investigators examined her office data practices, they found evidence Beatrice had sold personal information for over 3,000 clients while collecting preparation fees and identity trafficking payments exceeding $600,000 from criminal networks purchasing complete identity packages. Our fourth story takes us to Phoenix, where tax resolution specialist Thaddeus had been helping clients resolve IRS problems and negotiate payment plans throughout the valley for 7 years. He was advertised as a former IRS agent and praised by clients for his knowledge of tax law and ability to negotiate favorable settlements with the IRS. Thaddeus seemed genuinely experienced in tax resolution and committed to helping people resolve serious tax problems. Thaddeus negotiated a payment plan that saved my business and resolved my tax debt, shared relieved client Millicent during a tax resolution testimonial. His experience as a former IRS agent provided insider knowledge and negotiation skills that resolved my tax problems while saving thousands in penalties and interest. But clients started discovering their tax problems were getting worse despite paying Thaddeus substantial fees, with him claiming IRS bureaucracy and changing regulations that required ongoing representation and additional legal strategies to achieve resolution. My tax debt has increased and the IRS is threatening collection action despite paying Thaddeus for 2 years, explained frustrated client Archibald to tax resolution oversight. But he says IRS policy changes require additional representation and legal strategies that weren't included in our original tax resolution agreement. When Archibald hired legitimate tax attorneys who found that Thaddeus had never contacted the IRS and had no resolution experience, Thaddeus claimed alternative tax professionals lacked specialized IRS knowledge and negotiation experience that required specific training and insider connections for effective tax debt resolution. Investigation revealed Thaddeus had been deliberately providing fake tax resolution services while collecting fees from clients who believed he was negotiating with the IRS. But he never contacted tax authorities or attempted any resolution activities on behalf of clients. He'd been creating false documentation about IRS communications, fabricating negotiation progress, and collecting ongoing fees for tax resolution services that never occurred while clients' tax problems continued to worsen through neglect. The scheme particularly harmed taxpayers facing serious IRS problems who trusted professional tax resolution expertise but faced increased penalties and collection action through fake resolution services that provided no actual assistance. When IRS investigators examined his client communications, they found evidence Thaddeus had collected fees for fake tax resolution services from over 150 clients while stealing fees exceeding $900,000 for resolution services that were never provided. Our fifth story brings us to Houston, where enrolled agent Vivian had been representing taxpayers before the IRS and providing tax preparation services throughout Southeast Texas for 9 years. She was licensed by the IRS and recommended by tax professionals for her expertise in complex tax situations and audit representation. Vivian seemed genuinely qualified for tax representation and committed to protecting taxpayer rights during IRS proceedings. Vivian represented me during an IRS audit and achieved a favorable outcome that saved me thousands, shared grateful client Stanford during an enrolled agent evaluation. Her expertise in tax law and IRS procedures provided professional representation that protected my interests while resolving audit issues efficiently and favorably. But clients started receiving audit notices and penalties despite Vivian's representation, with her claiming IRS targeting and audit selection that required ongoing professional representation and appeal processes to protect taxpayer rights and achieve fair treatment. The IRS is pursuing additional audits and penalties despite Vivian's representation, explained concerned client Evangeline to Taxpayer Advocacy Services. But she says IRS targeting requires continuous professional representation and legal defense that wasn't included in our original audit representation agreement. When Evangeline hired independent tax counsel who found that Vivian had been providing false information to the IRS and worsening audit outcomes, Vivian claimed alternative representatives lacked specialized audit defense training and IRS relationship management that required specific expertise and ongoing professional development. Investigation revealed Vivian had been deliberately sabotaging client audits while collecting representation fees from taxpayers who trusted her expertise, then providing false information to the IRS that worsened audit outcomes and created additional tax liability and penalties for clients. She'd been giving incorrect information to IRS auditors, failing to provide required documentation, and making statements that increased client tax liability while collecting ongoing representation fees for audit defense that actually harmed rather than helped client cases. The scheme particularly harmed taxpayers facing IRS audits who trusted licensed professional representation but faced increased penalties and tax liability through deliberate audit sabotage disguised as professional tax representation. When IRS enrollment boards investigated her representation practices, they found evidence Vivian had sabotaged over 60 client audits while collecting representation fees exceeding $700,000 for audit defense services that deliberately worsened client outcomes. Our sixth story takes us to Chicago, where tax preparation software developer Clarence had been creating and maintaining tax filing applications for individual and small business use throughout the Midwest for 4 years. He was certified by software organizations and praised by users for his intuitive interface design and comprehensive tax calculation features. Clarence seemed genuinely skilled at software development and committed to making tax preparation accessible and accurate for non-professionals. Clarence's tax software makes filing easy and finds deductions I would have missed, shared satisfied user Ophelia during a software review evaluation. His intuitive design and comprehensive features provide professional-level tax preparation while remaining user-friendly for people without accounting backgrounds. But software users started experiencing calculation errors and filing problems, with Clarence claiming software bugs and tax law complexity that required ongoing updates and premium support services to ensure accurate tax preparation and successful filing. The software calculated my taxes wrong and caused problems with my IRS filing, explained frustrated user Mortimer to software support oversight. But Clarence says tax law complexity requires premium support and calculation verification that wasn't included in the basic software package and licensing agreement. When Mortimer hired tax professionals who found systematic calculation errors in Clarence's software, Clarence claimed alternative tax preparers were misinterpreting software functionality and tax calculation methodology that required specialized training and ongoing technical support for proper utilization. Investigation revealed Clarence had been deliberately programming calculation errors while collecting software fees and premium support payments from users who trusted his tax preparation technology but received incorrect tax calculations that created IRS problems and filing errors. He'd been programming the software to make calculation mistakes that would trigger IRS notices, create filing errors, and generate additional tax liability, then selling premium support services to fix problems that were intentionally created through defective programming. The scheme particularly harmed individual taxpayers and small businesses who trusted professional tax software but faced filing errors and IRS problems through deliberately defective tax calculation programming designed to generate ongoing support revenue. When software licensing authorities investigated his programming practices, they found evidence Clarence had created intentional calculation errors affecting over 5,000 software users while collecting software fees and support payments exceeding $400,000 for defective tax preparation technology. Our seventh story takes us to Atlanta, where payroll tax specialist Leroy had been managing payroll and employment tax compliance for small businesses throughout the southeastern region for 6 years. He was certified by payroll organizations and recommended by business associations for his expertise in employment tax law and payroll processing accuracy. Leroy seemed genuinely knowledgeable about payroll taxation and committed to helping businesses maintain compliance with complex employment tax requirements. Leroy handles all our payroll taxes accurately and keeps us compliant with employment tax regulations, shared satisfied business owner Tabitha during a payroll service evaluation. His expertise in employment tax law provides peace of mind and accurate payroll processing while ensuring compliance with federal and state tax requirements. But business clients started receiving notices about unpaid employment taxes and compliance violations, with Leroy claiming regulatory complexity and filing delays that required ongoing compliance monitoring and penalty resolution services to maintain good standing with tax authorities. The IRS says we owe back payroll taxes and penalties despite paying Leroy for tax compliance, explained panicked business owner Benedict to Payroll Oversight Services. But he says employment tax regulations require continuous monitoring and penalty resolution that wasn't included in our payroll tax compliance agreement. When Benedict hired independent payroll auditors who found that Leroy had been collecting payroll tax payments but never remitting them to the IRS, Leroy claimed payroll tax processing involved complex timing requirements and regulatory procedures that required specialized expertise and ongoing compliance management for proper execution. Investigation revealed Leroy had been deliberately stealing payroll tax payments while collecting service fees from businesses who trusted his payroll expertise, then keeping money that was supposed to be sent to the IRS for employee withholding and employer tax obligations. He'd been collecting payroll tax payments from businesses, depositing the money into accounts he controlled, and providing false documentation about tax remittance while never actually sending payments to tax authorities. The scheme particularly harmed small businesses who trusted professional payroll services but faced business closure and criminal liability when the IRS discovered unpaid employment taxes and employee withholding that had been stolen rather than remitted. When federal investigators examined his payroll practices, they found evidence Leroy had stolen payroll tax payments from over 40 businesses while collecting service fees and embezzling tax payments exceeding $1.8 million that should have been sent to the IRS. Our eighth story brings us to Portland, where estate tax attorney Millicent had been helping families navigate inheritance taxation and estate planning throughout the Pacific Northwest for 8 years. She was licensed by state bar associations and praised by clients for her expertise in complex estate tax law and family wealth preservation strategies. Millicent seemed genuinely knowledgeable about estate taxation and committed to helping families minimize tax liability while preserving wealth for future generations. Millicent helped us create an estate plan that minimizes taxes while protecting our family wealth, shared grateful client Horatio during an estate planning evaluation. Her expertise in estate tax law provides sophisticated planning strategies that preserve family assets while ensuring compliance with complex inheritance tax regulations. But families started discovering significant tax liabilities and estate problems after Millicent's planning, with her claiming tax law changes and estate complexity that required ongoing legal representation and additional planning strategies to protect family wealth and resolve inheritance tax issues. Our estate faces huge tax bills and legal problems despite Millicent's expensive planning, explained devastated family member Cordelia to estate planning oversight. But she says estate tax law changes require additional legal representation and planning modifications that weren't included in our original estate planning agreement. When Cordelia hired independent estate attorneys who found that Millicent had created estate plans that violated tax law and increased rather than reduced tax liability, Millicent claimed alternative attorneys lacked specialized expertise in sophisticated estate planning and advanced tax minimization strategies that required specific training and ongoing legal development. Investigation revealed Millicent had been deliberately creating defective estate plans while collecting legal fees from families who trusted her estate planning expertise, then designing plans that would create maximum tax liability and legal problems that required ongoing legal representation to resolve. She'd been creating estate structures that violated tax regulations, establishing trusts that would trigger additional tax liability, and implementing planning strategies that increased rather than reduced inheritance taxes while generating ongoing legal fees. The scheme particularly harmed wealthy families who trusted professional estate planning expertise but faced family wealth destruction and inheritance tax maximization through deliberately defective legal planning designed to generate ongoing legal revenue. When state bar associations investigated her planning practices, they found evidence Millicent had created defective estate plans for over 30 families while collecting legal fees exceeding $2 million for estate planning that deliberately increased rather than reduced tax liability. Our ninth story takes us to Denver, where international tax consultant Percival had been helping businesses and individuals navigate foreign tax compliance and reporting requirements throughout the Mountain West for 5 years. He was certified by international tax organizations and recommended by multinational companies for his expertise in cross-border taxation and foreign reporting obligations. Percival seemed genuinely experienced in international taxation and committed to helping clients maintain compliance with complex foreign tax requirements. Percival handles our international tax compliance and foreign reporting accurately and efficiently, shared satisfied multinational client Wilhelmina during an international tax evaluation. His expertise in cross-border taxation provides essential compliance services while navigating complex foreign tax regulations and reporting requirements that would be impossible to handle internally. But clients started receiving penalties and audit notices from multiple tax authorities, with Percival claiming international tax complexity and regulatory conflicts that required ongoing professional representation and compliance monitoring across multiple jurisdictions to maintain good standing with various tax authorities. We're facing penalties from multiple countries despite paying Percival for international tax compliance, explained frustrated business owner Algernon to International Tax Oversight. But he says cross-border tax regulations require continuous professional monitoring and multi-jurisdictional representation that wasn't included in our international tax compliance agreement. When Algernon hired independent international tax experts who found that Percival had been filing false foreign tax returns and creating compliance violations, Percival claimed alternative consultants lacked specialized training in complex international tax planning and multi-jurisdictional compliance management that required specific expertise and ongoing professional development. Investigation revealed Percival had been deliberately creating international tax problems while collecting consulting fees from clients who trusted his expertise, then providing false information to foreign tax authorities that created penalties and compliance violations across multiple jurisdictions. He'd been filing incorrect foreign tax returns, providing false information about client business activities, and creating reporting violations that triggered international tax authority investigation and penalties while collecting ongoing consulting fees. The scheme particularly harmed multinational businesses and individuals who trusted professional international tax expertise but faced global tax authority investigation and penalties through deliberately false foreign tax compliance that created rather than resolved international tax problems. When international tax licensing boards investigated his compliance practices, they found evidence Percival had created international tax violations affecting over 25 clients while collecting consulting fees exceeding $1.1 million for foreign tax compliance services that deliberately created rather than resolved international tax problems. Our 10th story brings us to Miami, where sales tax auditor Prudence had been conducting compliance reviews and audit defense for businesses throughout South Florida for 7 years. She was certified by state revenue departments and praised by business clients for her expertise in sales tax law and audit negotiation skills. Prudence seemed genuinely experienced in sales tax compliance and committed to helping businesses navigate complex state tax requirements and audit processes. Prudence handled our sales tax audit professionally and achieved a favorable outcome that saved us thousands, shared relieved business owner Clementine during a sales tax audit evaluation. Her expertise in state tax law and audit negotiation provided professional representation that protected our business interests while resolving compliance issues efficiently and cost-effectively. But business clients started facing increased penalties and audit expansion after Prudence's representation, with her claiming state tax authority targeting an audit escalation that required ongoing professional representation and appeal processes to protect business interests and achieve fair treatment. Our sales tax audit expanded and penalties increased despite Prudence's representation, explained concerned business owner Reginald to state tax oversight. But she says state tax authorities are targeting our industry and require continuous professional representation and legal defense that wasn't included in our original audit representation agreement. When Reginald hired independent tax counsel who found that Prudence had been providing information that worsened audit outcomes and increased business tax liability, Prudence claimed alternative representatives lacked specialized audit defense training and state tax authority relationship management that required specific expertise and ongoing professional development. Investigation revealed Prudence had been deliberately sabotaging client audits while collecting representation fees from businesses who trusted her expertise, then providing information to state tax authorities that increased audit scope and penalties while creating additional tax liability for client businesses. She'd been giving incorrect information to tax auditors, volunteering damaging details about client business practices, and making statements that expanded audit scope while collecting ongoing representation fees for audit defense that actually harmed rather than helped client cases. The scheme particularly harmed businesses facing state tax audits who trusted professional audit representation but faced increased penalties and expanded investigation through deliberate audit sabotage disguised as professional tax representation and compliance assistance. When state revenue departments investigated her representation practices, they found evidence Prudence had sabotaged over 50 business audits while collecting representation fees exceeding $600,000 for audit defense services that deliberately worsened rather than improved client audit outcomes. Our 11th story brings us to Dallas, where tax preparation franchise owner Delphine had been operating multiple seasonal tax offices throughout North Texas for 6 years. She was trained by national tax preparation companies and praised by corporate management for her business development skills and ability to maximize franchise profitability during tax seasons. Delphine seemed genuinely committed to business growth and customer service excellence. Delphine's tax offices provide convenient locations and professional service throughout the Dallas area, shared satisfied customer Barnabas during a franchise evaluation. Her business management creates accessible tax preparation services while maintaining professional standards and customer satisfaction across multiple office locations. But customers started discovering significant errors in their tax returns, with Delphine claiming staff training challenges and high-volume processing that created occasional mistakes requiring amended returns and professional correction services to resolve filing errors and ensure accurate tax compliance. Multiple offices prepared my family's taxes incorrectly, and we owe penalties to the IRS, explained frustrated customer Genevieve to franchise oversight. But Delphine says high-volume tax preparation creates occasional errors that require professional amendment services and penalty resolution that weren't included in our original tax preparation fees. When Genevieve hired independent tax professionals who found systematic errors across multiple franchise locations, Delphine claimed seasonal staffing challenges and training limitations created occasional processing errors that required ongoing quality control and professional oversight to maintain preparation accuracy and customer satisfaction. Investigation revealed Delphine had been deliberately hiring unqualified staff while collecting preparation fees from customers who trusted her franchise brand, then providing inadequate training that resulted in systematic filing errors designed to generate additional revenue through amendment services and penalty resolution. She'd been hiring seasonal workers without tax preparation experience, providing minimal training that ensured filing errors, and creating systematic mistakes that would require customers to purchase additional services to correct problems created through deliberately deficient tax preparation. The scheme particularly harmed working families who trusted franchise tax preparation but faced IRS penalties and filing errors through deliberately inadequate tax preparation designed to generate ongoing revenue through amendment services and error correction. When franchise licensing authorities investigated her operation practices, they found evidence Delphine had created systematic filing errors affecting over 800 customers while collecting preparation fees and amendment service payments exceeding $500,000 through deliberately deficient tax preparation, training, and quality control. Our 12th story brings us to Las Vegas, where tax preparation school instructor Ferdinand had been training students for tax preparation certification and seasonal employment throughout the desert Southwest for 4 years. He was certified by tax education organizations and praised by students for his practical teaching approach and industry knowledge that prepared graduates for successful tax preparation careers. Ferdinand seemed genuinely experienced in tax preparation education and committed to training competent tax professionals for seasonal employment opportunities. Ferdinand's tax preparation course provided comprehensive training that prepared me for successful employment during tax season, shared grateful graduate Octavia during a tax education evaluation. His practical instruction and industry expertise created essential skills and knowledge that enabled successful tax preparation career development and professional competency. But tax preparation graduates started failing certification exams and facing employment problems, with Ferdinand claiming exam difficulty and industry standards that required ongoing continuing education and additional training to achieve certification and maintain professional competency in rapidly changing tax law environment. I failed the tax preparation exam despite completing Ferdinand's expensive training program, explained frustrated student Lysander to tax education oversight. But he says certification requirements have increased and require additional training modules and exam preparation that weren't included in our original tax preparation education program. When Lysander hired independent tax education experts who found that Ferdinand's curriculum was outdated and inadequate for certification requirements, Ferdinand claimed alternative education providers lacked specialized industry knowledge and current tax law expertise that required specific training and ongoing professional development for effective tax preparation education. Investigation revealed Ferdinand had been deliberately providing inadequate education while collecting tuition fees from students who trusted his tax preparation training, then offering substandard curriculum that would ensure certification failure and employment difficulties that required additional paid training to resolve. He'd been using outdated tax law information, providing inadequate exam preparation, and teaching incorrect tax preparation procedures that would cause graduates to fail certification exams while collecting ongoing fees for additional training that should have been included in original education programs. The scheme particularly harmed students seeking tax preparation career training who trusted professional education expertise but faced certification failure and employment disappointment through deliberately inadequate education designed to generate ongoing training revenue through certification failure and career preparation deficiencies. When tax education licensing boards investigated his curriculum practices, they found evidence Ferdinand had provided inadequate training to over 200 students while collecting tuition and additional training fees exceeding $300,000 for tax preparation education that deliberately ensured student failure and ongoing training dependency. Our 13th story brings us to Indianapolis, where tax debt negotiation specialist Imogene had been helping taxpayers resolve serious IRS collection problems and negotiate installment agreements throughout central Indiana for 8 years. She was advertised as a former IRS collection agent and praised by clients for her knowledge of collection procedures and ability to stop IRS enforcement actions. Imogene seemed genuinely experienced in tax collection and committed to helping people resolve serious tax debt problems before losing their homes and businesses. Imogene stopped IRS collection action and negotiated a payment plan that saved my home, shared relieved client Algernon during a tax debt testimonial. Her experience as a former IRS agent provided insider knowledge and negotiation skills that resolved my tax debt crisis while protecting my family assets and financial security. But clients started facing resumed collection action and increased penalties despite paying Imogene substantial fees. With her claiming IRS policy changes and collection escalation that required ongoing representation and additional legal strategies to maintain protection from collection enforcement and asset seizure. The IRS resumed collection action and seized my bank account despite paying Imogene for debt resolution, explained devastated client Prudence to tax debt oversight. But she says IRS policy changes require additional representation and legal strategies that weren't included in our original tax debt negotiation agreement. When Prudence hired legitimate tax attorneys who found that Imogene had never contacted the IRS and had no collection experience. Imogene claimed alternative representatives lacked specialized IRS collection knowledge and enforcement prevention expertise that required specific training and insider connections for effective tax debt resolution and collection defense. Investigation revealed Imogene had been deliberately providing fake debt negotiation services while collecting fees from taxpayers who believed she was negotiating with the IRS. But she never contacted tax authorities or attempted any collection resolution activities on behalf of clients facing serious financial hardship. She'd been creating false documentation about IRS communications, fabricating negotiation progress, and collecting ongoing fees for debt resolution services that never occurred while clients' collection problems continued to worsen through neglect and continued IRS enforcement action. The scheme particularly harmed taxpayers facing home foreclosure and business closure who trusted professional debt resolution expertise but faced continued collection action and asset seizure through fake negotiation services that provided no actual assistance during financial crisis. When IRS investigators examined her client communications, they found evidence Imogene had collected fees for fake debt resolution services from over 120 clients while stealing fees exceeding $1.3 million for collection resolution services that were never provided to taxpayers facing serious financial hardship. Our 14th story brings us to Seattle, where corporate tax manager Bartholomew had been overseeing business tax compliance and planning for mid-sized companies throughout the Pacific Northwest for 9 years. He was certified by corporate accounting organizations and recommended by business executives for his expertise in corporate tax strategy and compliance management. Bartholomew seemed genuinely knowledgeable about corporate taxation and committed to helping businesses minimize tax liability while maintaining regulatory compliance. Bartholomew manages our corporate taxes efficiently and provides strategic planning that saves us significant money, shared satisfied executive Cordelia during a corporate tax evaluation. His expertise in corporate tax law provides comprehensive compliance management while identifying legitimate tax savings opportunities that enhance business profitability and financial performance. But corporate clients started facing audit notices and compliance violations, with Bartholomew claiming regulatory complexity and audit selection that required ongoing professional representation and compliance monitoring to protect business interests and maintain good standing with tax authorities. Our company faces a major tax audit and compliance investigation despite Bartholomew's management, explained concerned executive Algernon to corporate tax oversight. But he says corporate tax regulations require continuous professional monitoring and audit defense that wasn't included in our original tax management agreement. When Algernon hired independent corporate tax counsel who found that Bartholomew had been filing false corporate returns and creating compliance violations, Bartholomew claimed alternative accountants lacked specialized training in aggressive corporate tax strategies and audit defense that required specific expertise and ongoing professional development. Investigation revealed Bartholomew had been deliberately creating corporate tax problems while collecting management fees from companies who trusted his expertise, then filing false returns and providing incorrect information that triggered IRS investigation and penalties while embezzling corporate funds through fake tax payments. He'd been creating false corporate deductions, filing incorrect business returns, and embezzling money that was supposed to be paid for corporate tax obligations while providing false documentation about tax payments and compliance activities. The scheme particularly harmed mid-sized companies who trusted professional corporate tax management but faced business investigation and financial liability through deliberate tax fraud and embezzlement disguised as professional corporate tax compliance and strategic planning. When corporate tax licensing authorities investigated his management practices, they found evidence Bartholomew had created corporate tax violations affecting over 15 companies while embezzling funds and collecting fees exceeding $2.2 million for corporate tax management that deliberately created rather than resolved business tax problems. Our 15th story brings us to Phoenix, where retirement tax planner Cordelia had been helping seniors navigate retirement income taxation and Medicare planning throughout the valley for 6 years. She was certified by retirement planning organizations and praised by elderly clients for her expertise in retirement tax strategies and Social Security optimization. Cordelia seemed genuinely knowledgeable about retirement taxation and committed to helping seniors maximize retirement income while minimizing tax liability. Cordelia optimized our retirement income strategy and reduced our taxes while maximizing Social Security benefits, shared grateful retiree Algernon during a retirement planning evaluation. Her expertise in retirement taxation provides essential planning guidance that enhances retirement financial security while ensuring compliance with complex retirement income tax regulations. But senior clients started facing unexpected tax bills and benefit reductions, with Cordelia claiming retirement tax complexity and benefit regulation changes that required ongoing planning adjustments and professional monitoring to maintain optimal retirement income and tax efficiency. Our retirement taxes increased dramatically and Social Security benefits were reduced despite Cordelia's planning, explained confused senior Prudence to retirement planning oversight. But she says retirement tax regulations require continuous monitoring and planning adjustments that weren't included in our original retirement tax planning agreement. When Prudence hired independent retirement advisors who found that Cordelia had provided incorrect advice that increased tax liability and reduced benefits, Cordelia claimed alternative planners lacked specialized expertise in retirement tax optimization and benefit maximization that required specific training and ongoing professional development. Investigation revealed Cordelia had been deliberately providing bad retirement advice while collecting planning fees from seniors who trusted her expertise, then giving guidance that increased tax liability and reduced retirement benefits while convincing clients they needed ongoing planning services to resolve problems she was creating. She'd been providing retirement strategies that violated tax regulations, recommending benefit claiming strategies that reduced rather than maximized Social Security, and creating retirement plans that increase tax liability while generating ongoing planning fees for problem resolution. The scheme particularly harmed elderly clients on fixed incomes who trusted professional retirement expertise but faced reduced retirement security and increased tax liability through deliberately bad retirement planning designed to generate ongoing revenue through artificial planning complexity and problem creation. When retirement planning licensing boards investigated her advisory practices, they found evidence Cordelia had provided destructive retirement advice to over 70 senior clients while collecting planning fees exceeding $400,000 for retirement planning that deliberately reduced rather than enhanced retirement financial security. Our 16th story brings us to Boston, where tax preparation chain supervisor Algernon had been managing quality control and customer service for a regional tax preparation company throughout New England for 7 years. He was trained by national tax organizations and praised by corporate management for his customer retention skills and ability to maximize office productivity during busy tax seasons. Algernon seemed genuinely committed to customer satisfaction and efficient tax processing. Algernon's offices provide reliable tax preparation service with excellent customer support throughout tax season, shared satisfied customer Prudence during a tax service evaluation. His quality management creates consistent service delivery while maintaining professional standards and customer satisfaction across multiple office locations and seasonal staffing challenges. But customers started experiencing identity theft and financial fraud after using Algernon's tax services, with him claiming external security threats and identity theft from various sources that required credit monitoring and identity protection services to prevent ongoing fraud and financial damage. Someone used my personal information to open credit accounts after filing taxes at Algernon's office, explained victimized customer Cordelia to Identity Theft Services. But he says identity thieves target tax preparation offices and recommends professional identity protection services to prevent future fraud and financial exploitation. When Cordelia provided evidence that her identity was compromised through Algernon's office systems, Algernon claimed tax preparation businesses faced constant cyber attacks and security threats that made customer information vulnerable despite professional security measures and data protection protocols designed to prevent unauthorized access. Investigation revealed Algernon had been deliberately selling customer personal information while collecting preparation fees from clients who trusted his office security, then providing complete identity packages to criminal networks that used the information for credit fraud and financial exploitation across multiple states. He'd been collecting detailed personal and financial information from tax returns, then selling social security numbers, addresses, income information, and banking details to fraud rings that opened fraudulent accounts and filed false tax returns using customer identities. The scheme particularly harmed working families and seniors who trusted professional tax preparation but faced comprehensive identity theft and financial destruction through deliberate information trafficking that enabled widespread fraud using their personal and financial details. When federal investigators examined his office data practices, they found evidence Algernon had sold personal information for over 4,000 customers while collecting preparation fees and identity trafficking payments exceeding $900,000 from criminal networks purchasing complete customer identity packages for widespread financial fraud. Our 17th story brings us to San Antonio, where tax preparation software company owner Prudence had been developing and selling tax filing applications for individual and business use throughout South Texas for 5 years. She was certified by software development organizations and praised by users for her comprehensive tax calculation features and user-friendly interface design. Prudence seemed genuinely skilled at software development and committed to making professional quality tax preparation accessible to non-professionals. Prudence's tax software provides comprehensive features and accurate calculations that rival expensive professional preparation, shared satisfied user Cordelia during the software evaluation. Her intuitive design and comprehensive tax law integration provide professional-level preparation capabilities while remaining accessible for individuals and small businesses without accounting expertise. But software users started experiencing calculation errors and filing problems that created IRS penalties and audit notices, with Prudence claiming tax law complexity and software limitations that required premium support services and ongoing updates to ensure accurate preparation and successful filing. The software miscalculated my taxes and created IRS problems that cost me thousands in penalties, explained frustrated user Algernon to Software Oversight. But Prudence says tax law complexity requires premium calculation verification and professional support that wasn't included in the basic software purchase and licensing agreement. Investigation revealed Prudence had been deliberately programming calculation errors while collecting software fees and premium support payments from users who trusted her tax preparation technology but received incorrect calculations that created filing problems and IRS penalties. She'd been programming the software to make specific calculation mistakes that would trigger audit notices, create underpayment penalties, and generate filing errors that required expensive professional resolution while selling premium support services to fix problems she was intentionally creating. The scheme particularly harmed individual taxpayers and small businesses who trusted professional tax software but faced significant financial penalties and IRS problems through deliberately defective programming designed to generate ongoing support, revenue, and professional service fees. When software licensing authorities investigated her programming practices, they found evidence Prudence had created intentional calculation errors affecting over 6,000 software users while collecting software fees and support payments exceeding $700,000 for tax preparation technology that deliberately created rather than solved tax compliance problems. Our 18th story brings us to Detroit, where tax preparation consultant Cordelia had been providing specialized tax services for gig economy workers and independent contractors throughout southeastern Michigan for 4 years. She was certified by freelancer organizations and praised by clients for her expertise in self-employment taxation and quarterly payment planning. Cordelia seemed genuinely knowledgeable about independent contractor taxation and committed to helping gig workers navigate complex self-employment tax requirements. Cordelia handles my freelance taxes perfectly and helps me plan quarterly payments to avoid penalties, shared satisfied gig worker Algernon during a contractor tax evaluation. Her expertise in self-employment taxation provides essential guidance for independent contractors while ensuring compliance with complex quarterly payment requirements and business deduction optimization. But independent contractor clients started receiving large tax bills and penalty notices despite following Cordelia's guidance. With her claiming gig economy tax complexity and regulation changes that required ongoing professional consultation and compliance monitoring to maintain good standing with tax authorities. I owe thousands in taxes and penalties despite following Cordelia's quarterly payment plan, explained devastated contractor Prudence to self-employment tax oversight. But she says gig economy tax regulations require continuous professional monitoring and payment adjustments that weren't included in our original contractor tax consultation agreement. Investigation revealed Cordelia had been deliberately providing incorrect self-employment tax advice while collecting consultation fees from independent contractors who trusted her expertise, then giving guidance that created maximum tax liability and penalties while convincing clients they needed ongoing consultation to resolve problems she was creating. She'd been calculating incorrect quarterly payments that would create underpayment penalties, recommending business deductions that violated tax law, and providing self-employment strategies that increased rather than reduced tax liability while generating ongoing consultation fees. The scheme particularly harmed gig economy workers and independent contractors who trusted professional tax expertise but faced financial hardship through deliberately incorrect tax guidance that maximized penalties and created ongoing compliance problems requiring expensive professional resolution. When contractor tax licensing boards investigated her consultation practices, they found evidence Cordelia had provided destructive tax advice to over 150 independent contractors while collecting consultation fees exceeding $300,000 for self-employment tax guidance that deliberately created rather than resolved contractor tax compliance problems. Our 19th story brings us to Nashville, where estate planning tax advisor Algernon had been helping wealthy families minimize inheritance taxes and create tax-efficient wealth transfer strategies throughout Middle Tennessee for 8 years. He was licensed by financial planning organizations and recommended by estate attorneys for his expertise in advanced tax planning and generational wealth preservation. Algernon seemed genuinely experienced in estate taxation and committed to helping families preserve wealth while minimizing tax liability across generations. Algernon created sophisticated tax strategies that will preserve our family wealth for future generations, shared grateful family patriarch Prudence during an estate planning testimonial. His expertise in advanced tax planning provides comprehensive wealth preservation strategies while ensuring compliance with complex inheritance tax regulations and generational transfer requirements. But wealthy families started facing massive tax bills and estate problems after implementing Algernon's strategies. With him claiming tax law changes and estate complexity that required ongoing legal representation and additional planning modifications to protect family wealth and resolve inheritance tax issues. Our estate planning created huge tax liabilities instead of savings despite Algernon's expensive strategies, explained devastated family member Cordelia to estate planning oversight. But he says estate tax law changes require additional legal representation and planning revisions that weren't included in our original estate planning and tax minimization agreement. Investigation revealed Algernon had been deliberately creating defective estate plans while collecting planning fees from wealthy families who trusted his expertise, then designing strategies that violated tax law and created maximum inheritance tax liability rather than minimizing it. He'd been creating estate structures that triggered additional taxes, establishing trusts that violated IRS regulations, and implementing wealth transfer strategies that increased rather than reduced tax liability while collecting ongoing fees for problem resolution. The scheme particularly harmed wealthy families who trusted professional estate tax expertise but faced family wealth destruction and maximum tax liability through deliberately defective planning designed to generate ongoing legal fees and estate problem resolution services. When estate planning licensing authorities investigated his strategy practices, they found evidence Algernon had created defective estate plans for over 20 families while collecting planning fees exceeding $3 million for wealth preservation strategies that deliberately maximized rather than minimized inheritance tax liability. Our 20th story brings us to Minneapolis, where business tax credit specialist Prudence had been helping companies claim federal and state tax credits for research, development, and green energy projects throughout the upper Midwest for 6 years. She was certified by business development organizations and praised by corporate clients for her expertise in tax credit opportunities and compliance requirements. Prudence seemed genuinely knowledgeable about business tax incentives and committed to helping companies reduce tax liability through legitimate credit programs. Prudence identified tax credits that saved our company hundreds of thousands while supporting our research initiatives, shared grateful corporate executive Cordelia during a tax credit evaluation. Her expertise in business tax incentives provides significant tax savings while ensuring compliance with complex credit qualification requirements and documentation standards. But corporate clients started facing audit challenges and credit disqualification after claiming Prudence's recommended credits, with her claiming audit selection and credit scrutiny that required ongoing professional representation and documentation support to maintain credit eligibility and defend qualification criteria. The IRS is challenging our tax credits and demanding repayment despite Prudence's qualification analysis, explained concerned executive Algernon to Business Tax Oversight. But she says tax credit audits require specialized professional representation and documentation defense that weren't included in our original tax credit consultation and qualification services. Investigation revealed Prudence had been deliberately recommending fraudulent tax credits while collecting consultation fees from companies who trusted her expertise, then helping businesses claim credits they weren't qualified for while providing false documentation that would trigger IRS investigation and penalties. She'd been creating fake research documentation, fabricating green energy projects, and helping companies claim credits for activities that didn't qualify while collecting ongoing fees for audit defense when the fraud was discovered by tax authorities. The scheme particularly harmed legitimate businesses who trusted professional tax credit expertise but faced criminal investigation and massive penalties through fraudulent credit claims that violated federal tax law and created business liability for tax fraud and false documentation. When business tax licensing boards investigated her credit practices, they found evidence Prudence had facilitated fraudulent tax credit claims for over 30 companies while collecting consultation fees exceeding $1.5 million for tax credit services that deliberately created criminal liability and business destruction through federal tax fraud. Our 21st story brings us to Sacramento, where tax preparation chain auditor Cordelia had been conducting quality control reviews and error correction for a statewide tax preparation company throughout California for 5 years. She was trained by national tax organizations and praised by corporate management for her attention to detail and ability to identify preparation errors before filing. Cordelia seemed genuinely committed to quality assurance and preventing filing errors that could harm customers. Cordelia's quality control ensures accurate tax preparation and prevents costly filing errors, shared satisfied corporate manager Algernon during an internal evaluation. Her attention to detail and error identification provides essential quality assurance that protects customers while maintaining professional preparation standards and company reputation for accuracy. But customers started discovering that their returns contained errors despite quality control review, with Cordelia claiming preparation complexity and volume pressure that created occasional mistakes requiring amended returns and professional correction services to resolve filing problems and ensure accurate tax compliance. "My return has major errors despite supposed quality control review," explained frustrated customer Prudence to tax preparation oversight. But Cordelia says high-volume processing creates occasional errors that require professional amendment services and penalty resolution that weren't included in our original tax preparation fees and quality assurance promises. Investigation revealed Cordelia had been deliberately allowing errors to pass quality control while collecting fees from customers who trusted her review process, then permitting filing errors that would require customers to purchase additional amendment services and penalty resolution to correct problems that should have been prevented through proper quality control. She'd been identifying preparation errors during quality review, but allowing them to be filed anyway, creating a revenue stream from amendment services and error correction that customers needed to fix problems that were intentionally allowed through defective quality control processes. The scheme particularly harmed working families who trusted professional quality assurance but faced IRS penalties and filing problems through deliberately defective quality control designed to generate additional revenue through error correction and amendment services. When tax preparation licensing authorities investigated her quality control practices, they found evidence Cordelia had deliberately allowed over 1,000 filing errors while collecting quality control fees and amendment service payments exceeding $400,000 for quality assurance that intentionally failed to prevent errors, requiring expensive professional correction. Our 22nd story brings us to Tampa, where tax controversy attorney Algernon had been representing taxpayers in IRS disputes and litigation throughout Central Florida for 9 years. He was licensed by state bar associations and recommended by tax professionals for his expertise in tax court proceedings and dispute resolution. Algernon seemed genuinely experienced in tax litigation and committed to protecting taxpayer rights during complex IRS proceedings and court battles. Algernon successfully defended us in tax court and achieved a favorable ruling that saved our business, shared grateful business owner Prudence during a tax litigation testimonial. His expertise in tax law and courtroom advocacy provided professional representation that protected our business interests while achieving successful resolution of complex IRS disputes and litigation challenges. But clients started losing tax court cases and facing increased penalties despite Algernon's representation, with him claiming court complexity and IRS aggressive tactics that required ongoing legal representation and appeal processes to protect taxpayer rights and achieve fair treatment in tax dispute resolution. We lost our tax court case and face huge penalties despite Algernon's expensive representation, explained devastated client Cordelia to tax litigation oversight. But he says tax court proceedings require continuous legal representation and appeal strategies that weren't included in our original tax controversy representation agreement. Investigation revealed Algernon had been deliberately sabotaging client cases while collecting legal fees from taxpayers who trusted his litigation expertise, then providing poor representation that ensured court losses and maximum penalties, while convincing clients they needed ongoing legal services to appeal adverse decisions. He'd been failing to prepare adequate legal arguments, missing court deadlines, and providing ineffective representation that guaranteed adverse outcomes, while collecting ongoing legal fees for appeal processes that would also be deliberately sabotaged. The scheme particularly harmed taxpayers facing serious IRS disputes who trusted professional legal representation but faced court defeats and maximum penalties through deliberately incompetent legal representation designed to generate ongoing legal fees through artificial litigation complexity and appeal requirements. When state bar associations investigated his litigation practices, they found evidence Algernon had deliberately sabotaged over 40 tax court cases while collecting legal fees exceeding $2 million for tax controversy representation that intentionally ensured client defeat and maximum penalty assessment. Our 23rd story brings us to Charlotte, where payroll service provider Prudence had been managing employee compensation and tax withholding for small and medium businesses throughout the Carolinas for 7 years. She was certified by payroll processing organizations and recommended by business associations for her expertise in payroll compliance and employee tax management. Prudence seemed genuinely knowledgeable about payroll processing and committed to helping businesses maintain accurate employee compensation and tax withholding. Prudence handles our payroll processing accurately and keeps us compliant with employment tax requirements, shared satisfied business owner Cordelia during a payroll service evaluation. Her expertise in payroll management provides reliable employee compensation processing while ensuring compliance with complex federal and state employment tax regulations and reporting requirements. But business clients started receiving notices about payroll tax discrepancies and employee complaints about incorrect pay, with Prudence claiming processing complexity and regulatory changes that required ongoing compliance monitoring and payroll system upgrades to maintain accurate employee compensation and tax withholding. Our employees aren't receiving correct pay, and we have payroll tax problems despite Prudence's management, explained frustrated business owner Algernon to payroll oversight services. But she says payroll processing requires continuous system upgrades and compliance monitoring that weren't included in our original payroll management service agreement. Investigation revealed Prudence had been deliberately manipulating payroll processing while collecting service fees from businesses who trusted her expertise, then skimming employee wages and embezzling payroll taxes while providing false documentation about employee compensation and tax remittance. She'd been reducing employee wages by small amounts that were difficult to detect, stealing portions of payroll tax withholding that should have been sent to authorities, and embezzling employer tax contributions while providing false payroll reports and tax documentation. The scheme particularly harmed small businesses and their employees who trusted professional payroll processing but faced employee relations problems and tax compliance violations through systematic wage theft and tax embezzlement disguised as payroll processing errors and system complexity. When federal investigators examined her payroll practices, they found evidence Prudence had embezzled wages and taxes from over 60 businesses while collecting service fees and stealing employee compensation and tax payments exceeding $2.1 million through systematic payroll fraud and embezzlement. Our 24th story brings us to Milwaukee, where tax preparation software support specialist Cordelia had been providing technical assistance and error resolution for a major tax preparation application throughout the upper Midwest for 4 years. She was trained by software companies and praised by users for her problem-solving skills and ability to resolve complex software issues during tax season. Cordelia seemed genuinely knowledgeable about tax software and committed to helping users achieve successful tax preparation and filing. Cordelia resolved my software problems quickly and helped me complete my taxes accurately, shared satisfied user Algernon during a software support evaluation. Her technical expertise and patient assistance provided essential support during tax preparation while ensuring accurate calculation and successful electronic filing through professional software troubleshooting. But software users started experiencing recurring problems and filing errors despite Cordelia's support, with her claiming software complexity and user error that required premium support services and ongoing technical assistance to achieve successful tax preparation and accurate filing. My tax software keeps having problems despite Cordelia's support, explained frustrated user Prudence to software oversight. But she says complex tax situations require premium technical support and ongoing assistance that weren't included in basic software purchase and standard support services. Investigation revealed Cordelia had been deliberately creating software problems while collecting support fees from users who trusted her technical expertise, then sabotaging software functionality to generate demand for premium support services that were needed to fix problems she was intentionally creating. She'd been remotely accessing user software to create calculation errors, filing problems, and technical malfunctions that would require ongoing technical support while selling premium assistance services to resolve issues that were artificially created through software sabotage. The scheme particularly harmed individual taxpayers who trusted professional software support but faced filing delays and calculation errors through deliberately created technical problems designed to generate premium support revenue and ongoing technical assistance fees. When software licensing authorities investigated her support practices, they found evidence Cordelia had deliberately created over 3,000 software problems while collecting support fees exceeding $200,000 for technical assistance that artificially created rather than resolved user software difficulties and tax preparation problems. Our 25th story brings us to Phoenix, where tax education provider Algernon had been teaching continuing education courses for tax professionals and preparing students for industry certification throughout the Southwest for 6 years. He was certified by professional education organizations and praised by students for his comprehensive curriculum and practical industry knowledge. Algernon seemed genuinely experienced in tax education and committed to training competent tax professionals for successful careers in tax preparation and planning. Algernon's continuing education courses provide essential professional development and certification preparation, shared satisfied tax professional Prudence during an education evaluation. His comprehensive curriculum and industry expertise provide essential training for tax professionals while ensuring compliance with continuing education requirements and professional certification standards. But tax professional students started failing certification exams and facing professional competency problems. with Algernon claiming exam difficulty and industry standards that required additional training modules and specialized preparation to achieve certification and maintain professional standing in rapidly evolving tax practice environment. I failed my certification exam despite completing Algernon's expensive continuing education program, explained frustrated professional Cordelia to tax education oversight. But he says certification requirements have increased and require additional specialized training and exam preparation that weren't included in our original continuing education and certification preparation program. Investigation revealed Algernon had been deliberately providing inadequate education while collecting tuition fees from tax professionals who trusted his training, then offering substandard curriculum that would ensure certification failure and professional competency problems requiring additional paid training to resolve. He'd been using outdated tax law information, providing inadequate exam preparation, and teaching incorrect professional procedures that would cause students to fail certification requirements while collecting ongoing fees for additional training that should have been included in original education programs. The scheme particularly harmed tax professionals seeking career advancement who trusted professional education expertise but faced certification failure and career stagnation through deliberately inadequate education designed to generate ongoing training revenue through professional competency failure and certification preparation deficiencies. When tax education licensing boards investigated his curriculum practices, they found evidence Algernon had provided inadequate education to over 150 tax professionals while collecting tuition and additional training fees exceeding $500,000 for professional education that deliberately ensured student failure and ongoing training dependency. Our 26th story brings us to Denver, where tax resolution firm manager Prudence had been overseeing a team of tax debt negotiators and IRS representation specialists throughout the Rocky Mountain region for 8 years. She was trained by tax resolution organizations and praised by corporate management for her case management skills and ability to maximize firm profitability during tax debt resolution services. Prudence seemed genuinely committed to business efficiency and client service coordination. Prudence's firm provides comprehensive tax debt resolution services with professional case management, shared satisfied client Cordelia during a firm evaluation. Her management expertise creates efficient resolution processes while maintaining professional service delivery and client satisfaction throughout complex tax, debt negotiation, and IRS representation procedures. But clients started experiencing worsening tax problems and increased collection action despite paying substantial fees for resolution services. With Prudence claiming IRS policy changes and collection escalation that required ongoing representation and additional legal strategies to maintain protection from enforcement action and achieve successful debt resolution. Our tax problems got worse and collection action intensified despite paying Prudence's firm for resolution, explained devastated client Algernon to tax resolution oversight. But she says IRS policy changes require additional representation and legal strategies that weren't included in our original tax debt resolution and collection defense agreement. Investigation revealed Prudence had been deliberately managing fake resolution services while collecting fees from clients who believed her firm was negotiating with the IRS. But no actual resolution activities were performed and client tax problems continued to worsen through neglect and continued collection enforcement. She'd been managing a firm that provided no actual tax resolution services while creating false documentation about IRS communications and negotiation progress, collecting ongoing fees for resolution services that never occurred while clients faced continued collection action and financial hardship. The scheme particularly harmed taxpayers facing serious financial crisis who trusted professional tax resolution expertise but faced continued collection enforcement and asset seizure through completely fake resolution services that provided no actual assistance during desperate financial circumstances. When federal investigators examined her firm's practices, they found evidence Prudence had managed fake tax resolution services affecting over 200 clients while collecting fees exceeding $2.8 million for debt resolution services that were never provided to taxpayers facing serious collection enforcement and financial destruction. Our 27th story brings us to Atlanta, where independent tax consultant Cordelia had been providing specialized tax advice for high-income individuals and complex financial situations throughout the Southeast for 5 years. She was certified by financial planning organizations and recommended by wealth management firms for her expertise in advanced tax strategies and high net worth planning. Cordelia seemed genuinely knowledgeable about complex taxation and committed to helping wealthy clients minimize tax liability through sophisticated planning strategies. Cordelia provides sophisticated tax strategies that significantly reduce our tax liability while ensuring compliance, shared grateful high-income client Algernon during a tax consultation evaluation. Her expertise in advanced tax planning provides essential guidance for complex financial situations while ensuring compliance with intricate tax regulations and reporting requirements for high-income taxpayers. But wealthy clients started facing audit notices and significant penalties after implementing Cordelia's strategies, with her claiming IRS targeting and audit selection that required ongoing professional representation and compliance monitoring to protect client interests and achieve fair treatment during tax authority investigation. We're facing a major tax audit and penalties despite Cordelia's sophisticated planning, explained concerned client Prudence to high-income tax oversight. But she says IRS targeting of high-income taxpayers requires continuous professional representation and audit defense that weren't included in our original tax consultation and planning services. Investigation revealed Cordelia had been deliberately recommending illegal tax strategies while collecting consultation fees from wealthy clients who trusted her expertise, then providing advice that violated tax law and created criminal liability while convincing clients they needed ongoing representation to defend against IRS investigation. She'd been recommending tax shelters that were illegal, suggesting deduction strategies that violated federal law, and implementing planning techniques that constituted tax fraud while collecting ongoing fees for legal representation when clients faced criminal investigation. The scheme particularly harmed high-income individuals who trusted professional tax expertise but faced criminal prosecution and financial destruction through deliberately illegal tax advice designed to generate ongoing legal fees and consultation revenue through artificial planning complexity and criminal liability creation. When tax consultation licensing boards investigated her advisory practices, they found evidence Cordelia had recommended illegal tax strategies to over 40 wealthy clients while collecting consultation fees exceeding $1.8 million for tax planning that deliberately created criminal liability and federal prosecution risk. Our 28th story brings us to Las Vegas, where casino tax specialist Algernon had been helping gambling industry workers and professional gamblers manage their unique tax obligations throughout Nevada for 7 years. He was certified by gaming organizations and praised by casino employees for his expertise in gambling income taxation and gaming industry compliance requirements. Algernon seemed genuinely knowledgeable about gambling taxation and committed to helping gaming industry workers navigate complex tax obligations related to gambling income and casino employment. Algernon handles my gambling taxes professionally and ensures compliance with gaming income regulations, shared satisfied casino worker Prudence during a gaming tax evaluation. His expertise in gambling taxation provides essential guidance for casino employees while ensuring compliance with complex gaming income reporting requirements and gambling tax obligations. But gaming industry clients started receiving audit notices and penalties related to unreported gambling income, with Algernon claiming IRS scrutiny and gaming industry targeting that required ongoing professional representation and compliance monitoring to maintain good standing with tax authorities and avoid criminal investigation. The IRS is auditing my gambling income and claiming I owe huge penalties despite Algernon's tax management, explained worried client Cordelia to Gaming Tax Oversight. But he says gaming industry taxation requires continuous professional monitoring and audit defense that weren't included in our original gambling tax preparation and compliance services. Investigation revealed Algernon had been deliberately underreporting gambling income while collecting preparation fees from gaming industry clients who trusted his expertise, then filing returns that significantly reduced taxable gambling income while creating audit risk and penalty liability for clients. He'd been systematically underreporting casino winnings, failing to report gambling income that was required to be documented, and creating tax returns that violated gaming income reporting requirements while collecting fees for tax preparation that created rather than resolved compliance problems. The scheme particularly harmed casino workers and professional gamblers who trusted specialized gaming tax expertise but faced criminal investigation and significant penalties through deliberately false gambling income reporting designed to appear beneficial initially but create serious legal problems requiring ongoing professional representation. When gaming tax licensing authorities investigated his preparation practices, they found evidence Algernon had underreported gambling income for over 100 gaming industry clients while collecting preparation fees exceeding $400,000 for gambling tax services that deliberately created audit risk and penalty liability through false income reporting. Our 29th story brings us to Orlando, where vacation rental tax advisor Prudence had been helping property owners navigate short-term rental taxation and local compliance requirements throughout Central Florida for 4 years. She was certified by hospitality organizations and praised by property owners for her expertise in vacation rental tax obligations and local regulatory compliance. Prudence seemed genuinely knowledgeable about rental property taxation and committed to helping property owners maintain compliance with complex local and federal tax requirements. Prudence manages our vacation rental taxes efficiently and keeps us compliant with local regulations, shared satisfied property owner Cordelia during a rental tax evaluation. Her expertise in short-term rental taxation provides essential compliance management while ensuring accurate reporting of rental income and appropriate deduction optimization for vacation rental property operations. But property owners started receiving notices about unpaid local taxes and compliance violations, with Prudence claiming regulatory complexity and local tax changes that required ongoing compliance monitoring and penalty resolution to maintain good standing with local authorities and avoid property operation restrictions. We owe thousands in local taxes and face compliance violations despite Prudence's management, explained frustrated property owner Algernon to Vacation Rental Oversight. But she says short-term rental regulations require continuous monitoring and compliance management that weren't included in our original rental tax preparation and regulatory compliance services. Investigation revealed Prudence had been deliberately mismanaging rental tax obligations while collecting service fees from property owners who trusted her expertise, then failing to remit local taxes and creating compliance violations that would result in penalties and property operation restrictions for clients. She'd been collecting local tax payments from property owners but keeping the money instead of sending it to local authorities, creating false documentation about tax remittance while property owners faced accumulating tax debt and compliance violations. The scheme particularly harmed vacation rental property owners who trusted professional tax management but faced property seizure and business closure through systematic tax embezzlement and compliance fraud disguised as professional rental tax management and regulatory compliance services. When local tax authorities investigated her management practices, they found evidence Prudence had embezzled local taxes from over 80 vacation rental properties while collecting service fees and stealing tax payments exceeding $600,000 that should have been remitted to local tax authorities. Our 30th story brings us to San Diego, where nonprofit tax specialist Cordelia had been helping charitable organizations maintain tax-exempt status and compliance requirements throughout Southern California for 6 years. She was certified by nonprofit organizations and recommended by charitable foundations for her expertise in exempt organization taxation and regulatory compliance. Cordelia seemed genuinely knowledgeable about nonprofit taxation and committed to helping charitable organizations maintain their mission while ensuring tax compliance. Cordelia manages our nonprofit tax compliance perfectly and protects our tax-exempt status, shared grateful nonprofit director Algernon during a charitable organization evaluation. Her expertise in exempt organization taxation provides essential compliance management while ensuring our charitable mission remains protected through proper tax-exempt status maintenance and regulatory compliance. But charitable organizations started losing their tax-exempt status and facing compliance investigations, with Cordelia claiming regulatory complexity and IRS scrutiny that required ongoing legal representation and compliance monitoring to restore exempt status and maintain charitable operations. We lost our tax-exempt status and face IRS investigation despite Cordelia's compliance management, explained panicked nonprofit director Prudence to charitable organization oversight. But she says nonprofit tax regulations require continuous legal representation and compliance defense that weren't included in our original nonprofit tax management and exempt status protection services. Investigation revealed Cordelia had been deliberately violating nonprofit tax regulations while collecting compliance fees from charitable organizations who trusted her expertise, then engaging in activities that would trigger loss of tax-exempt status while convincing organizations they needed ongoing legal services to restore exempt status. She'd been allowing prohibited political activities, permitting excessive private benefit transactions, and creating compliance violations that would result in loss of tax-exempt status while collecting ongoing fees for legal representation to resolve problems she was deliberately creating. The scheme particularly harmed charitable organizations serving vulnerable populations who trusted professional nonprofit expertise but faced mission destruction and community service loss through deliberate compliance violations designed to generate ongoing legal fees and compliance resolution services. When nonprofit licensing authorities investigated her compliance practices, they found evidence Cordelia had deliberately violated nonprofit regulations for over 20 charitable organizations while collecting compliance fees exceeding $800,000 for nonprofit tax management that intentionally destroyed, rather than protected tax-exempt status and charitable operations. Our 31st story brings us to Albuquerque, where mobile tax preparation operator Algernon had been providing in-home and office visit tax services for elderly and disabled clients throughout New Mexico for 5 years. He was certified by community service organizations and praised by senior clients for his convenience and patience with elderly taxpayers who had difficulty traveling to tax offices. Algernon seemed genuinely committed to serving vulnerable populations and providing accessible tax services for people with mobility limitations. Algernon provides convenient in-home tax service with patience and respect for elderly clients, shared grateful senior client Prudence during a mobile tax service evaluation. His compassionate approach and professional expertise provide essential tax preparation services for seniors who have difficulty traveling while ensuring accurate preparation and respectful treatment of elderly taxpayers. But elderly clients started experiencing financial problems and benefit reductions after Algernon's tax preparation, with him claiming benefit complexity and Social Security regulations that required ongoing assistance and benefit optimization to maintain senior financial security and government benefit eligibility. My Social Security benefits were reduced and I lost financial assistance after Algernon prepared my taxes, explained confused senior client Cordelia to Elder Services Oversight. But he says senior benefit programs require continuous optimization and assistance that weren't included in our original tax preparation and senior financial planning services. Investigation revealed Algernon had been deliberately manipulating senior tax returns while collecting preparation fees from elderly clients who trusted his expertise, then filing returns that would reduce Social Security benefits and eliminate financial assistance programs that seniors depended on for basic living expenses. He'd been reporting income in ways that would disqualify seniors from benefit programs, claiming dependents that didn't exist to reduce refunds, and creating tax situations that would trigger benefit reductions while convincing elderly clients they needed ongoing financial planning services to restore benefits. The scheme particularly harmed vulnerable elderly clients on fixed incomes who trusted mobile tax services but faced poverty and benefit loss through deliberately manipulative tax preparation designed to create dependency on ongoing financial planning services and benefit restoration assistance. When Elder Services authorities investigated his mobile tax practices, they found evidence Algernon had manipulated tax returns for over 150 senior clients while collecting preparation fees exceeding $300,000 for tax services that deliberately reduced rather than protected senior financial security and government benefit eligibility. Our 32nd story brings us to Tucson, where Tax Preparation Training Academy Director Prudence had been educating students for seasonal tax preparation employment and professional certification throughout Arizona for 7 years. She was licensed by vocational education authorities and praised by students for her comprehensive curriculum and job placement assistance that helped graduates find employment during tax season. Prudence seemed genuinely committed to student success and professional development in tax preparation careers. Prudence's training program prepared me thoroughly for tax preparation work and helped me find good employment, shared successful graduate Cordelia during an academy evaluation. Her comprehensive education and job placement assistance provided essential career preparation while ensuring professional competency and employment success in tax preparation industry careers. But academy graduates started experiencing employment problems and professional competency issues, with Prudence claiming industry standards and employer requirements that necessitated additional training modules and continuing education to maintain employment eligibility and professional certification in rapidly changing tax preparation environment. I lost my tax preparation job due to competency problems despite graduating from Prudence's academy, explained frustrated graduate Algernon to Vocational Education Oversight. But she says industry standards require additional training and certification that weren't included in our original tax preparation education and career development program. Investigation revealed Prudence had been deliberately providing inadequate training while collecting tuition fees from students who trusted her education, then offering substandard curriculum that would ensure employment failure and professional incompetence requiring additional paid training to achieve basic job competency. She'd been using outdated tax preparation methods, providing inadequate software training, and teaching incorrect procedures that would cause graduates to fail employment requirements while collecting ongoing fees for additional training that should have been included in original education programs. The scheme particularly harmed students seeking career advancement in tax preparation who trusted professional education expertise but faced employment failure and career disappointment through deliberately inadequate training designed to generate ongoing education revenue through professional competency failure and employment preparation deficiencies. When vocational education licensing boards investigated her training practices, they found evidence Prudence had provided inadequate education to over 300 students while collecting tuition and additional training fees exceeding $700,000 for tax preparation education that deliberately ensured student failure and ongoing training dependency. Our 33rd story brings us to Spokane, where tax preparation franchise developer Cordelia had been establishing and managing seasonal tax office locations throughout the Pacific Northwest for 8 years. She was trained by national tax companies and praised by corporate management for her business development skills and ability to maximize franchise profitability through efficient operations and customer volume growth. Cordelia seemed genuinely committed to business expansion and franchise success. Cordelia's franchise management creates successful tax preparation businesses with strong community presence, shared satisfied franchise investor Algernon during a business development evaluation. Her expertise in franchise operations provides profitable business opportunities while serving community tax preparation needs through professional service delivery and efficient business management. But franchise locations started experiencing customer complaints and regulatory problems, with Cordelia claiming competitive pressure and regulatory complexity that required ongoing business support and compliance assistance to maintain franchise operations and profitability during challenging market conditions. Our franchise faces customer complaints and regulatory issues despite Cordelia's management support, explained concerned franchise owner Prudence to Franchise Oversight. But she says franchise tax preparation requires continuous business support and regulatory compliance assistance that weren't included in our original franchise development and management support agreement. Investigation revealed Cordelia had been deliberately creating franchise problems while collecting management fees from franchise owners who trusted her business expertise, then establishing operations that would generate customer complaints and regulatory violations requiring ongoing support services to resolve problems she was intentionally creating. She'd been hiring unqualified staff, providing inadequate training that ensured customer service problems, and creating business practices that would violate tax preparation regulations while collecting ongoing fees for problem resolution and compliance assistance. The scheme particularly harmed franchise investors who trusted professional business development expertise but faced business failure and regulatory sanctions through deliberately defective franchise management designed to generate ongoing support revenue through artificial business complexity and problem creation. When franchise licensing authorities investigated her development practices, They found evidence Cordelia had created operational problems for over 15 franchise locations while collecting management fees exceeding $900,000 for franchise support services that deliberately created rather than resolved business, operational, and regulatory compliance problems. Thank you for joining me tonight on Drowsy Tales Daily. And may these stories guide you into peaceful sleep with renewed awareness of the importance of financial accountability and protecting your most sensitive information from those who would exploit your trust during vulnerable tax preparation season. Sweet dreams, and I'll see you tomorrow night for another collection of fascinating Reddit stories designed to help you drift off to sleep.